we turn it off? Oh, I can do it on my phone.
Yeah.
Should turn it off. Hello, Jude Sandball, John Edwards here. We are in our weekly jam session, and today's topic is down payment options. There are all kinds of down payment options out there. If you don't have the tens of thousands of dollars, I'm just kidding. That's not necessarily true, depending on what property you're buying. But if you don't have a ton of money, there are options. And John's going to hit on all of them today. So take it away, John.
All right. Thanks, Jude. And again, John Edwards with Castle and Cook Mortgage. My NMLS is 671258.
I always forget. Yeah, I know. You got all that legal
compliance. Got to be compliant,
stuff and,
you know?
Right.
So, Jude, we'll go ahead and just kind of dive into the presentation here. And like you mentioned, we're going to talk about options. I think the reason I like this topic is because there's a lot of people out there that think, I don't have enough money to buy a house right now. And that may not always be the case. So let's look at some options as far as down payments and see if maybe you could potentially buy a house right now. So here's what we're going to discuss today. So we're going to talk about some ways to obtain funds for down payment on your new home, down payment assistance programs at a glance. What loan types offer their own minimum down payment amounts to help you purchase your next home? Pros and cons of down payment assistance. Are down payment assistance programs always your best option? And then we'll do a quick recap and wrap it up, Jude.
Sounds good.
All right. So, and Jude, let me just ask you first. So you've been doing this for a long time. Do you work with quite a few clients that when you first talk with them, they're like, I don't have enough money to buy a house. There's no way I could buy a house right now.
Clients, I talk with a lot of people all the time that say, hey, it's too expensive for me right now. And, I need $50,000 and I don't have it.
Right.
To which I ask, do you have a job? Yep. Have you been working at it a while? Yep. Do you have a decent credit score? Yep. And I said, well, you got to talk to John then because you may not necessarily need that much monmoney. So
that's
people
exactly
are really
right.
surprised.
That's exactly right. There are a lot of programs out there, a lot of government-backed programs, for not charity but nonprofit organizations that are out there to help people to purchase homes. So that's what this discussion is going to be about today. And we'll dive in a little bit to the details of it. There's so many programs out there. I chose some of the more popular ones in the Denver area that we can talk about a little bit more, but certainly you can Google and find probably hundreds of different programs out there. So
and for the people watching that are outside of the Denver metro area, there may be stuff in your area or in different parts of the country. We're going to be focusing primarily and specifically on the stuff in the Denver metro area and in Colorado.
Yeah, definitely in Colorado, more specifically in the Denver metro area. But outside the Denver metro area, there are programs as well. Specifically, USDA is a great program that allows for 100% financing, and definitely want to check out the guidelines on that or reach out to me and I can help more with that. But that's a great program if you're looking sort of in the outskirts of the major metropolitan areas. So the first thing that we'll dive into here is just some ideas in terms of where you can come up with money for down payment. This may seem obvious, but a savings account, maybe you have an investment account, or perhaps your parents or grandparents have set up an investment account for you. You can use retirement funds, which not a lot of people know about, or maybe they've heard about it, but they're not entirely sure how that works. But in a lot of cases, you can use retirement funds, life insurance, cash values, or we've had people sell personal possessions so that they have money for a down payment. You use your discretion on that wisely. But, for instance, we had somebody that had a mobile home or a camper and they didn't really need it anymore. Okay. So they went and sold that and had $12,000. Right. Well, I think they had lived in it at one point, but they weren't living in it at the time. Right. And so they just had it. So they had $12,000 to use. Maybe you've got two different cars or a car and a truck or something, but don't necessarily need them. And then stocks or bonds are always an option as well. We've had clients in the past whose grandparents bought them, a bunch of bonds in like 1980, and they decided it was time to cash those out and had some funds to purchase a home. So there's a lot of different options out there. Those are just some examples. You can get a gift from an immediate family member. So there are some pretty strict guidelines on who you can get a gift from. I could not give you a gift, Jude, to buy a house, and you can't give me a gift.
Why?
Because Fannie Mae doesn't allow for that. Neither does FHA. But
she's terrible.
I know, right?
Yeah.
Or Freddie Mac, for that matter.
He's terrible.
He's horrible too.
Yeah.
So, but there are some options. Immediate family members. There's a little bit of gray area there. So if you had a parent that wasn't exactly a parent but raised you and would have some sort of an interest in you having a home. We've actually done them before where we've had an ex-husband provide an ex-wife with money to purchase.
Nice.
She had kids and he had a vested interest that they should have a house to live in. So there's some exceptions to the rule. Down payment assistance programs.
Let me interrupt you. Would the safest bet be to talk to you first? Say 100%. Or somebody else says, "Yeah, I want to give you the money. Here it is. I'm going to transfer it to your account." Don't do it yet.
Yeah, don't do it yet. Wait and talk to a lender first.
And the reason being, there's all this documentation behind it that needs to happen and needs to be done the right way, etc. So while it's great, hug them, say thank you, stay in their good graces.
Be nice to them.
Keep them on the Christmas card list, but then talk to you.
Yes,
first. Okay.
Exactly.
Okay.
Yeah, we do need to source those funds. We need to make sure they're seasoned. We are going to need documentation. Let's say it's from your grandparents. We are going to need documentation from the account that those funds are coming from, which your grandparents are not going to be happy about. They're going to think we're invading their privacy. These are the guidelines.
It's the government.
I don't want their bank statements, but Fannie Mae, Freddie Mac, FHA, VA, and USDA do. So you may have heard of CHFA, CHFA, or CHAC, CHAC, or MMA, and we'll dive into what those acronyms mean and what those programs can do for you from a down payment standpoint. And then loan types that support lower down payment amounts or can be used with a down payment assistance program. So conventional, FHA, VA, USDA, and we've talked about those before, Jude. So we'll just dive
in. We talked about those last week. So if you're not familiar with those, take a look back on our Facebook pages or on our YouTube channels and learn what the different types of loans that are out there. But if you don't want to do that, just give John or I a call and we'll get you up to speed.
We're happy to help.
Absolutely.
All right. So CHEF is the Colorado Housing and Finance Authority. They're going to give you either a grant of 4% or a silent second of 5%. So I'll dive into what that means a little bit here. So a grant does not need to be repaid. A silent second does. However, you don't repay that silent second until you sell the home or refinance the home. So you're not making payments on it every month. It's just kind of sits there. And then when you go and do something with the loan, you're going to pay it off at that time.
Loan with no repayments, no payment plan or anything except at the end of the loan.
Exactly.
So basically, we could say these are free money. This is free money.
Yeah, I mean it needs to be repaid in a sense.
Okay, but even the grant.
But the grant is free money.
Is free.
Yeah,
100% free.
I mean you're paying.
You're not crossing your fingers anywhere.
You're going to pay extra in closing costs. You're going to have a higher interest rate.
Okay.
Nothing's free.
Okay.
To that extent,
okay.
When they provide these funds, there's an additional risk. I mean, you're not bringing a whole lot to the table in that particular case.
Okay.
You have a vested interest in the property, and they appreciate that. But at the same time, it's a bigger risk that you could default on the loan.
Okay.
So there are going to be higher costs, higher interest rates, and I'll talk a little bit about that in a little bit. But
gotcha.
Nothing is really free, although there are probably some programs out there that you could find where they may actually give you funds just like a scholarship. $1,000 minimum from borrower. Gift is fine. So that's what they require is that the borrower brings $1,000 to the transaction or more. Available in all counties of Colorado. There are income and loan amount limitations by county as well. And the buyer must attend a home buyer seminar. So
like a week-long seminar?
No, it's not that bad. It's a one-day in-person class. I think it's a full-day in-person class, which is free, or you can take it online for $100 for the first person and $50 for each additional person. And it takes a while to get through that one as well. I think that's an 8-hour class as well.
Okay.
But a couple of options there for you. And then CHAC, the Colorado Housing Assistance Corporation. So similar guidelines to the above with CHFA, except that you must be a first-time home buyer to use CHAC. And this is a second mortgage that you will repay as part of your monthly payment, and they will give you up to $10,000.
Wow.
So MMA is the Metro Mortgage Assistance Program. Also similar guidelines to the CHFA guidelines, except the borrower would need to bring 0.5% as their minimum to the transaction. And that is a grant of 4%. So it's a grant, so it does not need to be repaid. Yes, you're going to have higher costs and a little bit higher interest rates as well.
All right. So basically, if they have $1,000
Mm-hmm.
and they can get through, they can get into any one of
They can
these
pass, yeah, they get through all the guidelines and
down
stuff.
payment assistance programs if they meet the specific guidelines.
Exactly.
That's
Yep.
it. $1,000.
Yeah, in some cases as little as $1,000. Yeah.
Okay.
Yeah.
That's awesome.
Yeah, it's pretty cool. It's designed to be that way, to be easy and hopefully help more people to buy homes. So what loan types are out there and what benefits do they offer? So again, we talked about this a little bit last week, but there's conventional, there's VA, USDA, FHA. So while most down payment assistance programs work with FHA financing, there are some that you can also do with conventional and VA as well, and USDA. So VA loans themselves, so Veteran Administration loans for active duty or honorably or general discharged veterans. They do have the option to purchase a home with a VA loan with up to 100% financing and no mortgage insurance. That is essentially zero money down with no mortgage insurance.
Okay. So there's no reason for you use one of the other programs with the VAs.
Yeah, you might use one of the other ones to cover some of the closing costs. You're
Okay.
still going to have closing costs on a VA loan.
So you can
Most
still
of the
utilize
time,
those together.
Yeah, most of the time when we've done them, veterans have taken a little bit higher interest rate and covered the cost with that. So, and I can talk more in detail if you want to give me a call on that as to how that would work. And USDA works very similar to the VA, 100% financing. However, USDA does have mortgage insurance, although it is a reduced mortgage insurance amount, and it is limited by income and loan limitations. Where VA is not so much limited. They even have a jumbo program as well. And then conventional financing, which is, when we say conventional, we're talking about Fannie Mae and Freddie Mac, which are two entities that are going to create the guidelines for those particular loans. And ultimately, they're going to buy those loans, in our case, directly from us. 3% down for first-time home buyers, which is a great program. You are going to have a little bit higher interest rate on those. There's some additional risk given the lower amount of the down payment, but it can be a great program. And then FHA allows for as little as 3.5% down, and they've got more lenient guidelines than most conventional loans do as well.
All right. So somebody that may not have a lot of down payment, but's got or any down payment, or just $1,000,
Right.
but has a good job and has good credit. What are they going to probably, if they're not if they're not in a rural area, they're not a veteran, what are they
What are they going to do? Well, so one of those three programs, CHFA seems to be the most popular. We've worked with them quite a bit. We've got the processes in place for them. But, there's definitely going to be situations where a second mortgage is going to make sense. Or MMA might make sense, which is the Metro Mortgage Assistance Program. They've got a little bit higher income limitations and stuff like that. So each person is really their own specific situation. And that's why we like to dive in, gather as much information as possible, and then give you your options.
So that's why it's best to call you.
Always,
I know there are a lot of resources online.
I wouldn't look at this and try to decide which program is best for you. I would call a lender, call myself. If you want to, let's gather all the information, get everything we need, and then we can make a really nice recommendation.
Right, because I get a lot of clients that may not have already talked to a lender, and they'll say, "Yeah, I've been looking online. I think I'm going to do
I'm going to do this program."
And there's a lot of information, which is great because it empowers people to know and get a working knowledge of it. But really, that's why you get paid the big bucks, is because this stuff is so fluid and changing. And it's not just interest rates that are changing. It's way that people qualify. So it's incredibly important. Again, first thing, call you before anything happens.
Absolutely.
And find out where you stand, what loan,
You got it.
etc.
Yeah, that's absolutely the right approach for sure.
Thank God, I've been telling people the right thing to do.
All right, so let's talk about some pros and cons of down payment assistance. Some of the pros: provide funds to help you purchase your new home. I mean, that's kind of the key ingredient here. Is you don't have the money, or you have the money but you don't want to use it. Here's some programs that are going to give you the money to help you buy that house, hopefully. And then sometimes you don't have to repay those funds at all. And we talked about that with the grants. So in some cases, like you said, you could put $1,000 into the purchase of a home and you don't have to repay the grant that's given to you, which is nice.
So it's almost like free money.
It's almost like free money. Very
money.
Close. Very close.
It feels free.
It does.
For
it feels
time
free.
being.
Yes.
And then and then you got to pay it back at the end.
You're paying it back one way or the other, whether it's the interest rate or the costs or something like that. But over a longer period of time, where again, if you're cash strapped, it can be a great tool to use to help buy a home. And then some of the cons: more strict guidelines, so credit, debt ratios, income limitations, those kinds of things. They do typically come with some additional guidelines and rules in order to get an approval for those funds. Higher interest rates and costs resulting in higher monthly payments. So usually you will have a little bit higher monthly payment if you use down payment assistance on the same price home versus if you did not use it and you brought those funds to closing yourself.
Okay. And you're not making money off that. It's just because of the loan that's being provided by CHFA or CHAC, and that's how they're able to then help other people with the same programs, correct?
Yep, exactly.
Okay.
Exactly, yep. So sometimes you have to repay the funds. Well, that's true, but what are you going to do? Borrow it today and pay it back over a longer period of time. That's sort of the definition of a loan, right?
Right.
And then less equity in your home to begin with. So because you've got those higher costs, in the case of an FHA or any of the government loans, you're going to have those upfront funding fees, which they're going to add on to your loan amount, which is going to reduce your equity a little bit, your equity position. But as always, the best way to gain equity in your property is to buy in an area, hopefully, that has values that are going up. Mm-hmm. And also you can always pay more on the principal balance of your loan to pay it down. So those are some quick strategies to build some equity in your property as well. So our down payment assistance program is always your best option. So this goes to just because you can do something doesn't always mean that you should. Right. And I think that applies here as well.
Right?
Exactly. And I think it applies here as well. We've had a lot of situations where we've had clients who, we've talked with them about down payment assistance programs, given them the options, and they have some funds and they just didn't necessarily know if they wanted to use them or use all the funds. Again, everyone is their own situation, but sometimes it's at the end of the day, everything shakes out and really you don't end up wanting to use the down payment assistance program.
Sure.
Because you want those lower interest rates, lower monthly payments, those kinds of things.
Well, and maybe a good idea is to talk to your financial planner.
Mm-hmm.
When people come to me initially, I'll say, run the contracts through your attorney, talk to your financial planner about, or your accountant about what's going to be the best loan type for you if you're up in the air about what you should do.
Yeah.
And we will be happy to work and talk with them about the macro of what the whole situation looks like if they have questions.
Absolutely. Yep. If you have enough funds for the minimum down payment yourself for FHA or conventional, it might very well make sense to use those funds as you will get better loan terms. And we just talked about that, better interest rates, lower costs in most cases. The more options you have, the better. Weigh your options and determine if you should use down payment assistance or not. Do the numbers work? Do they make sense? And that's something we sort of talk about each week is know your comfort level, know how to run the numbers. And if the numbers make sense, then go ahead. If not, then don't force the issue, right? So that's pretty much everything with our presentation. There's some contact information there for me. Jude, you want to let everyone know how they can get in touch with you as well?
Well, all the links will be right here and right around this video. But if you want to call me directly, 720-255-1021 or Jude at judesandval.com.
All right. Sounds
Awesome.
good.
Thanks, John.
June. We'll see you guys next week.